Your bank account contains pirate gold, not metaphorically, literally. The institution holding your money was built on stolen treasure, and they invented a system to make theft look like trade. Check the founding date of any major European bank: 1650 to 1750, the golden age of piracy. That's not a coincidence. Port Royal, Jamaica, 1692. Henry Morgan walks into a merchant counting house with 200,000 pieces of eight, stolen from Spanish galleons. Blood money. The merchant doesn't ask questions. He issues Morgan a letter of credit. Just like that, Morgan becomes a legitimate businessman. Spanish gold transforms into English capital. The merchant keeps 10%. This transaction, it created modern banking. And it's still happening today. Your mortgage, your credit card, your investment portfolio. They're 3 centuries removed from Morgan's blood money, but the mechanism is identical. Dirty money enters the system. The system certifies it as clean. The institution takes a fee. The money becomes legitimate. What if I told you the world's most trusted banks perfected this process by laundering pirate treasure? What if the evidence is sitting in their own archives? September 8th, 1695. The pirate Henry Every attacks the Mogul treasure ship Ganj I Sawai off the coast of India. The haul is absolutely staggering: 600,000 pounds sterling in gold, silver, and gems. That's equivalent to $160 million today. It's the richest pirate raid in history. Every and his crew sail to the Bahamas, but they've got a problem. They can't just spend this fortune. The coins are marked. The jewels are recognizable. They need to convert stolen goods into liquid capital. They need a bank. Here's what the history books conveniently skip over. Every didn't hide his treasure on some beach. He didn't bury it on a deserted island. He deposited it in Nassau, in Charleston, in Boston. Colonial merchants accepted the loot, issued bills of exchange, and Every's crew walked away with clean paper money they could spend anywhere. The merchants melted down the coins, removing the Spanish or Mogul marks. They sold the gems through London dealers. The original theft became completely untraceable. The money entered circulation. And the merchants? They kept a nice percentage for the service. This wasn't some exception to the rule. This was the business model. Between 1650 and 1730, pirates seized an estimated 100 million pounds sterling from Spanish, Portuguese, and Mogul ships. That's $22 billion in today's money. Here's the thing. Most of that treasure didn't stay buried on beaches. It was laundered through merchant banks in Port Royal, Nassau, Boston, Charleston, and Amsterdam. These weren't criminal enterprises operating in the shadows. These were the predecessors of modern banks. And they discovered something revolutionary: stolen money, once you process it through the right paperwork, becomes legitimate capital. Let me show you exactly how the mechanism worked. Before the 1650s, if you stole gold, you had to spend stolen gold. The coins could be traced. The seller could be prosecuted for receiving stolen goods. But colonial merchant banks introduced a brilliant new instrument: the bill of exchange. You deposit gold, regardless of where it came from. The merchant issues paper worth the gold's value. You take that paper to London or Amsterdam and exchange it for clean currency. Meanwhile, the original gold gets melted down, recast, and sold as bullion. The connection to theft is completely severed. The paper becomes money. Captain William Kidd demonstrates the system's power perfectly. In 1698, Kidd attacks the Quebec merchant off India, seizing 400,000 pounds in gold and silk. He knows he can't just return to New York with stolen goods. He'll hang. So he deposits the treasure with merchant Thomas Clark in the Caribbean. Clark issues Kidd a letter of credit. Kidd sails to Boston with paper, not gold. He presents the letter to merchant Samuel Sewall. Sewall gives Kidd clean currency. Now, Kidd gets arrested anyway and hanged in 1701. But here's the crucial part. The merchants kept the gold. Clark and Sewall were never prosecuted. The treasure entered the legitimate economy, and both men used it to finance their trade ventures. The explosion of Caribbean merchant banking between 1650 and 1720 matches exactly with the golden age of piracy. Port Royal had 127 registered merchant houses by 1690. Nassau had 84 by 1715. Charleston had 63 by 1718. What were they trading? Officially, sugar, tobacco, and slaves. But the capital backing those trades came from pirate deposits. The merchants didn't ask questions because the entire economy depended on it. Colonial trade ran on stolen Spanish silver. That's the secret nobody talks about. The legitimate economy and piracy weren't opposed to each other. They were completely integrated. Look at the Bank of England. Founded 1694. Its first major depositor was the English East India Company. Where did the East India Company get its capital? From trading with pirates. Company ships purchased goods from Madagascar, a pirate haven where Henry Every and dozens of others sold their plunder. The East India Company bought gems and silk, then resold them in London. The profit got deposited in the Bank of England. The bank didn't care about origin. They cared about liquidity. The Dutch actually did this even more efficiently. Amsterdam became the laundering capital of Europe. The Dutch East India Company maintained what they called neutral relationships with pirates operating in the Indian Ocean. Pirates would sell their haul to company agents in Batavia or Ceylon. The company would pay in Dutch guilders, clean currency. The pirates got liquid money. The company got goods below market price. And Amsterdam banks like Wisselbank processed the transactions without any scrutiny whatsoever. By 1720, an estimated 30% of precious metals flowing through Amsterdam had pirate origins. That metal backed the guilder. Your money today descends directly from that system. But here's what nobody teaches you in school. The system didn't just tolerate piracy. It actually required piracy. Spanish colonies were sitting on mountains of silver. Spain kept extremely tight control. Only Spanish ships could carry it. That created artificial scarcity in other European markets. Pirates broke the monopoly. They stole Spanish silver and sold it to English, Dutch, and French merchants at a discount. Those merchants deposited it in banks. The banks issued loans backed by that silver. The loans financed trade, industry, and colonial expansion. Without pirate silver, there's no capital for the Industrial Revolution. The entire modern economy is built on this foundation. Henry Morgan proves the point beautifully. Morgan was technically a privateer, basically a legal pirate with a government license. Between 1663 and 1671, he raided Spanish colonies in Panama and Cuba, seizing over 400,000 pounds in treasure. In 1672, King Charles II knighted him, Sir Henry Morgan. In 1674, Morgan was appointed Lieutenant Governor of Jamaica. His job? Stop piracy. The irony is absolutely perfect. But here's what happened next. Morgan used his plundered wealth to establish sugar plantations. He partnered with London merchants to export sugar to England. He deposited his profits in the Bank of England's predecessor institutions. By the time he died in 1688, Morgan was a respected businessman. His pirate gold had become legitimate capital. And his business partners? They founded banks. The pattern repeats across every major pirate. Captain Thomas II raided Mogul ships in the 1690s. He deposited his haul with merchant Frederick Phillips in New York. Phillips used the money to finance his shipping empire. Phillips's company later became part of the New York banking system. Captain Christopher Condent seized 150,000 pounds in the Indian Ocean in 1720. He retired to France, deposited his fortune in French banks, and lived as a respected merchant until his death in 1770. His money was never confiscated. It stayed in the banking system. Now fast forward. The Caribbean piracy era ends around 1730. Why? Not because governments finally defeated the pirates. Because the banking system matured. Banks no longer needed pirates to break the Spanish silver monopoly. They had accumulated enough capital to operate independently. The Bank of England, the Dutch East India Company banks, and French merchant banks had built up sufficient reserves, much of it originally from pirate deposits, to finance trade without relying on stolen treasure. The pirates became obsolete. The system consumed them and evolved. But the mechanism they invented? It never disappeared. It just got more sophisticated. In 1970, the Bank of Credit and Commerce International opened in Luxembourg. BCCI became the largest bank in the developing world by the 1980s. In 1991, it collapsed. Investigations revealed BCCI had laundered billions for drug cartels, arms dealers, and dictators. The exact same mechanism Henry Morgan used in 1670. Dirty money enters as deposits. The bank issues clean instruments, wire transfers, letters of credit, bonds. The origin becomes untraceable. The institution takes its fees. Except BCCI got caught. Morgan never did. Let me show you just how invisible this has become. In 2012, HSBC, one of the world's largest banks, admitted to laundering $881 million for Mexican drug cartels and sanctioned regimes. The fine was $1.9 billion. Nobody went to jail. The bank's executives apologized. Operations continued. Your money might be in HSBC right now. The system hasn't changed in 320 years. The only difference is scale. Morgan laundered 200,000 pieces of eight. HSBC laundered $881 million. The mechanism is identical. Accept deposits without scrutiny. Provide clean instruments. Take a fee. And this is happening right now, today. The Panama Papers in 2016 revealed how major banks helped clients hide $32 trillion in offshore accounts. The Paradise Papers in 2017 exposed 180 politicians using shell companies serviced by banks to hide their wealth. These aren't scandals. These are features of the system. The banking system was designed from the ground up to make money untraceable. Pirates didn't invent money laundering. They just showed banks how incredibly profitable it could be. Consider the current global banking system. When you deposit money, the bank doesn't verify its origin. They're required by law to report suspicious activity, but the threshold is extremely high and enforcement is rare. Your paycheck deposits right next to deposits from a shell corporation in the Cayman Islands. Both become bank assets used to issue loans. The system aggregates everything into one giant pool. Origin becomes completely irrelevant. That's not a bug in the system. That's the design. Henry Morgan would recognize it immediately. Now for the uncomfortable question. How much of global wealth is actually built on theft? Not ancient theft from centuries ago. Modern theft. Consider colonial extraction. European banks financed the theft of resources from Africa, Asia, and the Americas for 400 years. The profits were deposited in London, Amsterdam, Paris. Those deposits became the capital base of modern banking. The British Empire extracted an estimated $45 trillion from India between 1765 and 1938. Where did that money go? British banks. Where did British banks invest it? Global markets. That capital is still circulating today. Your pension fund might contain returns on investments originally financed by stolen Indian wealth. The really uncomfortable part? There's absolutely no way to unwind it. The money has been circulating for so long, been invested and reinvested so many times, that tracking original sources is impossible. Morgan's Spanish gold became English pounds, which financed trade ships, which generated profits, which were deposited in banks, which issued loans, which built factories, which produced goods, which were sold for currency, which was deposited again. After 300 years and literally a million transactions, how do you identify which dollar in your bank account descended from piracy and which didn't? You can't. The system was specifically designed to make that impossible. But understanding the system completely changes how you see legitimacy. When a bank claims a 250-year history of trusted service, ask yourself what they were servicing in 1700. When an institution boasts about financing economic development, ask where the original capital came from. When financial advisors talk about legacy wealth, remember that some legacies involve swords, cannons, and stolen galleons. Look at how the language evolved. In 1670, Henry Morgan was a pirate. In 1672, he was Sir Henry Morgan. In 1688, his obituary called him a successful planter and businessman. Same man, same money, different words. The money didn't change one bit. The description did. That's the real innovation. Banks discovered you can transform theft into trade through paperwork and time. Wait long enough, process it through enough institutions, and blood money becomes investment capital. The final irony? Modern banks spend billions on know your customer and anti-money laundering compliance. They employ thousands of people to track suspicious transactions. But those suspicious transactions are what built their institutions in the first place. HSBC was founded in 1865 to finance trade between Europe and Asia, much of it opium trade, which was explicitly illegal in China. The bank's original purpose was to help British merchants profit from selling addictive drugs to Chinese citizens against Chinese law. That's the foundation. Everything since has been built on top of that. You want to know the scariest part? The system is more entrenched now than it was in 1700. Henry Morgan's merchant banks served hundreds of clients. Modern banks serve billions. In 1700, if a merchant bank collapsed, it affected one port city. Today, if a major bank fails, it threatens the entire global financial system. That's exactly why HSBC wasn't shut down for laundering drug money. That's why no executives went to jail. The bank had become too big to fail. The institution that was built on processing questionable wealth had become so critical to the economy that prosecuting it would cause more damage than the crime it committed. Think about what that actually means. The system has evolved to a point where it's basically immune to consequences. A bank can admit to laundering nearly $1 billion for cartels, a crime that would imprison any individual for life. And the punishment is a fine equal to 3 weeks of profit. The bank continues operating. Your deposits stay right there. And the mechanism keeps running because shutting it down would collapse the economy. That's not Morgan's genius. That's the system's genius. It made itself absolutely indispensable. Pirates needed banks to legitimize their treasure. Now we all need banks just to participate in the economy. You can't opt out. Your salary requires a bank account. Your mortgage requires a bank. Your retirement requires banks to invest your savings. The system that started by laundering pirate gold now processes every single legitimate transaction. And because legitimate and illegitimate money flows through the exact same pipes, the system can't distinguish between them, or won't. Let me show you the current scope of this. The United Nations estimates $800 billion to $2 trillion in illicit money is laundered annually through the global banking system. That's 2 to 5% of global GDP every single year. The International Monetary Fund says less than 1% of laundered money is ever seized, meaning 99% successfully enters the legitimate economy. Henry Morgan's success rate was probably lower. The modern system is actually more efficient than piracy ever was. And here's the part that should genuinely terrify you. Most of that laundered money passes through banks you recognize, not shadowy criminal enterprises. Major institutions with branches in your city. When HSBC laundered cartel money, they did it through correspondent banking relationships, where small banks use big banks to process international transactions. That means regional banks unknowingly process drug money because HSBC provided the infrastructure. The system is so interconnected that illegal money spreads through it like water through cloth. You can't contain it without stopping the entire flow. Now for the honest question nobody wants to ask. If the global banking system was built on pirate treasure, financed colonial extraction, launders billions annually, and is too critical to shut down even when caught red-handed, is it actually legitimate? Not legally. Morally. We've decided it's legitimate because we need it to function. But need doesn't equal legitimacy. It just means we can't imagine an alternative. The pirates understood something we've completely forgotten. Legitimacy isn't about morality. It's about power. Henry Morgan became Sir Henry Morgan not because his behavior changed. He was still a violent thief. He became legitimate because he had enough money to buy legitimacy. The merchant banks became respectable institutions not because they stopped processing stolen goods. They just waited until everyone forgot the origin. The system runs on collective amnesia. Wait long enough, and all money becomes clean. So what do you actually do with this information? You can't withdraw your money from unethical banks because all major banks have similar histories. You can't avoid the system because modern life requires banking. You can't reform it because it's too big, too interconnected, too critical to the economy. The honest answer is uncomfortable. You participate in a system built on theft. You benefit from that system if you have any savings or investments at all, and there's no practical way to disentangle yourself from it. But understanding the origin fundamentally changes how you think about economic morality. The next time someone says, just work hard and save, remember that some fortunes started with swords and cannons. The next time you see a bank's advertising about trust and legacy, remember those legacies include pirate gold. The next time a banker talks about ethical investing, ask when that ethics clock actually started because it definitely wasn't 1700. The final truth? Henry Morgan won. Not just for himself, for the entire system. He proved that stolen wealth, given enough time and the right institutions, becomes completely indistinguishable from earned wealth. 300 years later, his model runs the global economy. The banks he deposited in evolved into the banks you use today. The mechanism he exploited, converting questionable money into legitimate capital, is now the foundation of international finance. And nobody remembers he was a pirate anymore. They remember he was Sir Henry Morgan, lieutenant governor, successful businessman. That's the real lesson here. The system doesn't punish theft if the theft is large enough and patient enough. It absorbs it, legitimizes it, and builds on top of it. Morgan's Spanish gold became English pounds, which became investment capital, which became global finance. The origin dissolved into history. The money remained. And everyone agreed to call it legitimate because the alternative, admitting the foundation of modern banking was literally piracy, would undermine confidence in the entire system. You're using that system right now. The phone you're reading this on was probably financed through credit backed by deposits in banks with histories stretching back to colonial merchant houses. The money in your account circulates through institutions that once processed pirate treasure without asking a single question. You're not separate from this history. You're part of it. 3 centuries later, we're all spending pirate gold. We just use different words for it now. We call it banking.